At a time when tensions in East Asia are rising faster than anyone expected, a quiet but deeply troubling question is emerging. What happens to nearly 100,000 Japanese citizens living in China if a Taiwan crisis erupts? Over the past decade, since 2014, at least 17 Japanese business professionals have been suddenly detained under China's sweeping national security laws. Major cases, like the 2023 arrest and the 2025 sentencing of an Astellas Pharma employee, sent shockwaves through Japan's corporate world. And yet, more than 13,000 Japanese companies continue operating inside China, even as the United States and Europe steadily reduce their exposure. From opaque detentions to pandemic-style lockdown powers that China can activate at any time, the risks are no longer hypothetical. Today's analysis asks a difficult but unavoidable question: why are Japanese firms still expanding in China, and what happens when geopolitical reality collides with business tradition? This is the story behind the warnings, the numbers, and the growing fear that in a true emergency, tens of thousands of people could be trapped with nowhere to go. For nearly half a century, Japanese companies viewed China as a natural extension of their economic horizon, a vast market with unmatched labor resources and a rapidly growing middle class. From the late 1970s, when China launched its reform and opening policies, to the surge of investment in the 1990s and 2000s, the logic seemed unshakable: go where the growth is. China became the world's manufacturing hub, a place where supply chains were deep, diverse, and agile. By around 2010, Japanese companies were pouring in at unprecedented speed, chasing consumer expansion and enjoying preferential treatment from local governments eager to attract foreign capital. This momentum did not slow even when political frictions emerged. Low manufacturing costs, tax incentives, and the convenience of sourcing nearly every component locally outweighed geopolitical warnings. As the Japanese domestic market stagnated under demographic decline, China became not just attractive but, in the eyes of many executives, indispensable. Yet while Japan's business community continued relying on decades-old assumptions, China itself was transforming. By the mid-2010s, precisely the period when the Ministry of Foreign Affairs later confirmed that detentions of Japanese nationals began rising, the Chinese state was tightening its control over information, data, and foreign interactions. Beginning in 2014, at least 17 Japanese corporate employees were detained on national security grounds. And these were not fringe cases. They included researchers, supply chain personnel, factory managers, and in one of the most widely reported incidents, an Astellas Pharma employee arrested in Beijing in 2023 just before boarding a flight home. The charges were vague, the judicial proceedings opaque, and by 2025, he was sentenced to 3.5 years in prison, an outcome that shook corporate Japan but did not fundamentally change its behavior. This is where the political landscape shifted decisively. China's national security framework expanded dramatically, culminating in the 2023 revision of the counter-espionage law. Under this revision, simply handling data, collecting, storing, forwarding, could be treated as a potential security violation. The definition of state secrets became effectively unlimited. In practice, this meant that routine business exchanges, internal corporate documents, or even ordinary communications could be interpreted as illicit. For foreign businesspeople, the legal boundary between normal work and criminal suspicion became impossible to identify. Crucially, the issue is not whether an individual intends wrongdoing, it is whether the state decides that a certain piece of information falls within its expanding security perimeter. This climate creates a persistent sense of uncertainty. Families and employers often receive no clear updates after an arrest. Diplomatic channels move slowly. The state's interpretation, not a transparent legal standard, determines whether an individual's actions are permissible. In a system where national security is prioritized over legal clarity, every foreign worker becomes a potential bargaining chip, even if unintentionally. And Japan, due to its economic presence and geopolitical position near Taiwan, sits in a particularly delicate category. But the risks extend beyond detentions. China retains the administrative tools to restrict movement at any time, a capability demonstrated unmistakably during the COVID-19 lockdowns. Foreigners living in Chinese cities saw apartment buildings sealed shut, neighborhoods barricaded, and airports rendered inaccessible without official authorization. Many could not return home for months. Unlike Western lockdowns, which still allowed essential movement and upheld foreigners' right to exit, China's approach was absolute, enforced by a security apparatus that monitored residents digitally and physically. And importantly, these powers were not created for the pandemic. They are rooted in existing laws such as the National Security Law and the National Defense Mobilization Law. In other words, the state already possesses a legal basis to impose sweeping movement restrictions if political conditions, especially a Taiwan crisis, demand it. From this perspective, the much-discussed figure, nearly 100,000 Japanese nationals living in China as of 2024, becomes more than a demographic statistic. It becomes a vulnerability. Should a Taiwan emergency erupt, geopolitical calculations might overshadow individual rights or bilateral considerations. Mass exit could be restricted. Travel permissions could be suspended. Administrative inspections could delay departures indefinitely. Even without overt hostility, simple bureaucratic friction could trap tens of thousands of people inside China without a clear path home. This is not speculation, it is an extension of patterns that have already occurred during peacetime. And yet, despite all this, Japanese corporate exposure to China continues to rise. By 2024, more than 13,000 Japanese companies operated in China, an increase of over 300 locations compared to 2 years earlier. This stands in stark contrast to the behavior of American and European firms, which, according to surveys by the U.S. Chamber of Commerce and the European Chamber of Commerce, are reducing involvement and in some cases exiting at the fastest pace on record. While the West interprets China's direction as one of tightening political control and increasing strategic risk, Japanese firms remain anchored, perhaps trapped, by decades of sunk costs and the inertia of old business habits. Part of this divergence stems from Japan's traditionally cautious foreign policy culture. Tokyo warns, but does not push. It advises vigilance but stops short of actively directing companies to diversify or withdraw. This hands-off approach might have made sense in the 1990s, when globalization seemed apolitical. In today's environment, it leaves companies underprotected and overexposed. And the harsh truth is that some Japanese executives still operate under the assumption that economic relations naturally restrain political escalation, an assumption many Western policymakers abandoned after watching how Beijing weaponized economic ties against Australia, Lithuania, and other states. The reality is stark. For Japan, China is both an economic partner and the nation most capable of exerting direct pressure on its citizens abroad. This duality has created a strategic dilemma that Tokyo has not yet confronted with the seriousness it deserves. Let's begin with the most discussed solution, withdrawal. For many Western companies, withdrawal is no longer hypothetical. The U.S. Chamber of Commerce reported in 2023 that roughly a quarter of American companies operating in China were already moving operations abroad or considering it. European surveys from 2023 to 2024 show record high levels of relocation or downsizing within China, as firms seek more stable political environments in Southeast Asia or their home markets. This trend, often described as de-risking, is not ideological. It is a practical response to unpredictable regulation, data control laws, and rising geopolitical friction. For Japan, withdrawal carries higher immediate costs because of the sheer scale of its historical investment in China, but that does not change the fundamental truth revealed by global corporate behavior. Staying in China is no longer the default assumption. Of course, a full exit is neither simple nor feasible for all companies. Some have complex supply chains or rely on localized production. But the alternative to withdrawal is not passivity, it is restructuring. The strategy widely adopted by multinational firms is China Plus One, a diversification model that maintains a presence in China while shifting critical operations to more stable regions such as ASEAN, India, or Japan itself. This model reduces exposure to legal risks, detentions, and supply chain disruptions. It also ensures that if China imposes movement restrictions, similar to those seen during COVID-19, when foreigners were physically prevented from leaving cities or reaching airports, companies will still have operational continuity elsewhere. Japan, however, has been slow to adopt this approach. While American and European companies have already normalized diversification, Japanese corporate presence in China increased to 13,034 locations in 2024, up 328 from 2 years earlier. This divergence speaks to deeply rooted business culture, a preference for stability, loyalty to existing supply chain partners, and reluctance to disrupt legacy operations. Yet in a world where geopolitical conditions shift faster than corporate routines, these traditional instincts become liabilities. Japan risks becoming the last major economic power still heavily dependent on China at a time when the world is hedging against exactly that vulnerability. If withdrawal and diversification form the structural response, then protection forms the operational response. Western corporations maintain crisis management units that prepare for scenarios such as mass detentions, exit bans, and sudden political retaliation. Some even secure prearranged charter flight options or alternative evacuation routes in the event that major airports are closed during emergencies. These are not theoretical exercises, they are based on lessons drawn from past crises in China, the Middle East, and Eastern Europe. Japan, by contrast, has few standardized corporate protocols for evaluating employees or maintaining communication during detentions. When Japanese nationals have been arrested since 2014, 17 cases documented by the Ministry of Foreign Affairs, families and employers often struggled to obtain even basic information, while diplomatic responses proceeded slowly due to limited early warning mechanisms. Tokyo's own approach remains largely reactive. It issues warnings and travel advisories, but it does not impose strict guidelines or enforce diversification strategies as Washington and several European governments have done. Japan's political culture traditionally avoids heavy-handed intervention in corporate autonomy. But in an age where China can restrict movement, seize passports, or classify ordinary business documents as national security materials, the boundary between corporate risk and national security risk dissolves. Protecting citizens abroad should no longer be viewed as merely a corporate responsibility, it is a matter of state strategy. The brutal but unavoidable conclusion is this: if a Taiwan emergency occurs, China possesses the legal, administrative, and logistical tools to restrict the movement of foreign nationals, including nearly 100,000 Japanese civilians. Even without hostile intent, bureaucratic slowdowns, nationwide security inspections, and sudden exit requirements could trap large populations. The COVID-19 lockdowns proved that China can immobilize millions of residents, including foreigners, through sweeping orders backed by police and digital surveillance. A Taiwan crisis would give Beijing far greater justification to activate similar powers under the National Security Law, the National Defense Mobilization Law, or the Counterespionage Law. In such a scenario, Japan's ability to extract its citizens would depend less on diplomacy and more on the preparedness of its corporations and government long before the crisis begins. Therefore, Japan faces a strategic crossroads. It can continue relying on old assumptions, that economic interdependence prevents political escalation, that diplomacy will protect civilians, that China will separate business from national security. Or it can adapt to the world as it is, a world in which major powers use economic leverage, legal ambiguity, data control, and administrative force to pursue strategic goals. Companies that continue expanding in China without redesigning their risk posture are, in effect, betting their employees' safety on a geopolitical environment that no longer exists. Ultimately, safeguarding Japanese citizens requires a coordinated approach: corporate diversification, government-backed contingency planning, stronger intelligence sharing mechanisms, and clear evacuation strategies that do not depend on ideal circumstances. None of this is easy. None of it is cheap. But the alternative, complacency, comes with a cost measured not in profits or market share, but in the vulnerability of tens of thousands of people who may one day find themselves unable to leave China during a crisis.